All right, welcome back to another episode of Lambert's Moneymaker. Woo! We got with us the lovely Tiffany Phillips. She is an
Hi.
expert loan officer out of Southern California. What's up?
Yes.
How you been,
Thank
Tiffany?
you so much for having me. I'm doing great. Ready
Absolutely.
for this tide to turn so
Yeah,
we
that's
can
what we're going to
really
talk
start
about.
getting
Interest
these
rates.
deals going. Yeah.
What are the interest rates? So today we're going to talk about interest rates, what you're doing with mortgages, loans, how you can help people, and where do you see us going in the near future as it pertains to interest rates? Because right now they suck.
Yeah. It's been challenging, just for everybody. It's like you just have to be more in. I'm definitely just trying to get people in and prepared
Mhm.
because it's like this market has been so fluctuating. It's like I think of it like throughout the year, we have had some great, like it goes lower. Like we've had 5% for, if you think about it in the year span, there's been multiple weeks where we did get back in the 5%, but the people that were able to get in there, or even I had some fours for like FHA or VA, but it was the people that were already ready to go. Even if they weren't ready at that time, I would still have them in. We talked about their goals. And then as soon as those rates lowered, now they were able to do something. So I'm really just like kind of urging everybody that even if it's not like right now, like get with your loan officer, get with your team.
Mhm.
So when we do have those windows, because there's probably another one opening up, usually in between like January and February for a couple of weeks,
Okay.
it'll dip a little bit. Yeah,
So
usually.
that's so. Have you seen it since the hike started? Uh,
Mhm.
when they do have a little pullback, do you see it happening at certain times of the year?
It's just like so hard to say right now because it's the way that it's been fluctuating. I just call them little windows. But we kind of we they did anticipate it last year before maybe like November. There was there was like chatter going around that there's going to be a window that you should purchase in between like December and February. And this is like from some economists,
Mhm.
that they were placing their predictions. And we did. We got people in, like, even at that time last year, in a tough market, there were, I remember getting one in at 5.65 or 5.75%.
Wow,
And
that's good.
then it shot back up to the 7%. So it really was just like a small window.
So you said you got a few in at like 4% FHA and VA.
Um, it got a little down. That was going to be in between the time of August and October.
Oh yeah, I
I think
remember.
he lowered, so
Yeah.
Powell lowered the rates
Hmm.
50 basis points in September. However, we were already, most of us brokers, and even like if you're at a big retail, and maybe they were doing the same thing. I really don't know.
Yeah.
But he had already, like the CEO and the owner of like one of the really big lenders, he had already cut it. He was already giving Essex incentive about, I think it was about 50, might have been a little more, 50 basis point or maybe around there. Um, so a month before it happened, we were already getting people in that lower rate. So when they were actually dropped,
Hmm.
it actually kind of went up a little for us because we already had the
Oh wow.
but I feel like a lot of people were paused because they were waiting to get the cut. But again, that's what I'm talking about, these little windows, like get prepared, get with your lender, and just be ready so we can get you in as the fluctuations go.
Okay, so let's talk about where are interest rates today, and then how do people get prepared?
Okay, so right now they're still very high. We had about a month and a half where we did get into the FHAs were in low 5%, even a little bit of the 4% on the board. So some people did get those refinances in, maybe a couple of purchases. So that was really good. We're back up. I think as of today, it was like 6.5 or 6.8. So we're still in between that 6.5 and 7.5. If you're conventional VA, FHA, still around there.
Okay.
If you're in like a non-QM loan, like bank statement loans, those are going to DSCR loans. These are going to be probably in those mid 7.
Okay.
7 to like 7.5. I just priced one out yesterday that was about 7.75. So
on your DSCR, do you have lenders that lend on off of STR numbers?
On the
so short-term rental numbers.
Yes.
Yes.
So yeah, sorry. Our lingo is a little different, but yes, it's going to be different. So the short term, when they're doing the DSCR loan, the short term numbers usually are going to be higher, which is good, but it's more risky.
Yeah.
So your LTV is going to be a little different. Like they might want you, if you're a new investor, instead of putting 20% down and you're doing a short-term rental, maybe even on your first or second investment, they're going to want you to put 25% down.
Well, so
versus if you were just going to get like a long-term rental, then so that's where that kind of comes in. Like, it might cost more upfront.
We're doing, I think we have one that we're looking at right now, but we're putting down like 50%.
Okay.
Yeah, 50% down, and the other 50 is DSCR. Actually, we're doing 50% down, but that down is coming from the seller, so it's like a seller finance hybrid kind of deal.
Okay. Yeah.
Doing a double close.
Okay.
Yeah, so somebody brings in the funds, the DSCR lender brings in the other, then the deal closes, and then the funds go back to the transactional lender, and now we have first position DSCR, second position seller finance.
Okay, nice.
Yeah, but we don't tell the lender that.
No, yeah, I'm like, I don't think that we do that. Yeah.
That's called a Morby method.
We're the only ones in there. Yeah, the lender.
That's
because you do like a lot of the seller financing, and
yeah, we're big on. That's sub 2, baby. Whoa.
Yes, I've been getting. I know. I'll have to send them to you because I've been getting more and more people calling me about sub 2.
What do you mean? Like, what are they asking?
Yeah, like just. I had a few but I think they were coming to me for like the financing for it.
Yeah.
But
like
yeah.
Yeah.
I was like, I think, because I don't specialize in that. So
that's the hardest part about, Pace Morby will tell you it's the easiest part because he's got financing out the yin yang, and anybody will lend to him because he's credible. But I'd say for the average investor that's trying to do sub 2, the hardest part is finding that person to come in as a second position. Usually it's going to be a private money lender or a private money partner.
Yeah.
Yeah. But we don't have to get too much in the weeds in that.
Yeah. I love my Burr method investors because that's like perfect.
Yeah, we're doing one of those.
The DSCR. That's when I sold them.
Well, I'm closing on one. It's supposed to be, it's 2 weeks late already. But it should, hopefully Friday, all goes well. And we're going to rehab it, and then we're going to burr out of it. But we're actually turning that into an independent living facility.
Okay.
So we're turning the garage into 3 beds and 1 bath. So it's like adding a whole additional 1,000 square feet.
Is that like the pad splits?
Not a pad split.
Oh, okay.
No, I don't. A pad split's good, not great, and it's not great in Las Vegas.
Yeah, I hear it's good in Florida.
Yeah, and Dallas. Dallas is really good.
Yeah.
Houston
Or
too.
California, I think too.
I wouldn't do it in California. You know why?
Okay,
Because your laws suck.
that's
Too many squatters. The squatters got more rights than the landlord.
true. That's
Yeah.
true. I
But
know. Everybody is investing in other states.
yeah, I mean, California ruins it for people, just their stupid laws and regulations. But um, so you're like talking about getting your clients prepared
Yes.
for when the rates drop.
Yeah.
Tell our peeps out there that are listening, all one of them.
Yes. So, like, as we've been going through this time, I feel like, and it's just something that is within us. Like, we don't want to get started until we feel ready or until they say that the rates are lower or and especially in this market, we do have little windows and things, especially if people are looking to refinance. If anyone's in the 6 to 7-8%, a lot of them already refinanced in that first one, in that first dip. But even if you're not quite ready, like I have a whole list, I stay in touch with my clients. They already fill out the application. And if you are looking to refinance at least sometime this year, then it's really just about getting me the information, filling out the app, staying in touch, telling me what your goals are. And then as soon and I'm always just like, looking at the rates, waiting for the drop. So the moment that we get to what you want or what is good for you and we're ready to go, like, boom, we're already in the system. We're locking that rate. And now you're saving hundreds of dollars, rather than kind of waiting for all these things to, coming from third parties. Like now is the time. So, if you're looking to purchase, same thing, there's going to be a lot of changes coming in the beginning of the year. We are switching administrations. There's going to be new changes that are coming out that again, I know. Yes. I know. I'm happy too. So,
Yeah.
so yeah. And to me personally, I think it's going to be moving in the right direction, but it's it's been a crazy time. And I urge everybody, like, get your team, be with your loan officer, get your realtor, get all your ducks in a row and make sure that you know your budget, where your ceiling is, like go over the payment, not just like if you have any credit things, anything that we can do for you to get you in a better position, because we do anticipate the rates lowering. And as soon as they do, if you kind of wait, it's like everybody's going to come out at once. And even if you find something right now,
Mhm.
it's like this is a season less people are shopping, but also the people that are selling need to sell.
Mm.
There's a problem that they're trying to solve, like wholesalers and stuff always talk about that. So if if you do find your home within this time frame where there's not many people out, you're more likely to get seller credits and
Mhm.
negotiations. And so I urge them, even if it's not like right this second, they might not love where the payment's at. They want to wait a little bit, like still get everything lined up and just keep your eyes open and have your team ready to go.
Right on.
Mm-hmm.
Okay. So if it's like, but what do we like? So does your company, whenever you say like getting prepared for like
Mm-hmm.
just a regular person, not an investor,
Yeah.
because you work with regular buyers, right?
Yeah,
Most.
regular buyers, investors. So I am with I finance mortgage. So I am with a brokerage. So I have my top lenders that, one of my main ones, I usually go to them first. Just their system and their efficiency is like incredible.
Mhm.
So of course I'm going to take them there. If they don't kind of fit in that box, or I can't take them there, or you know if they don't provide the loan that's needed for them, then I will start going through my other lenders. So
Got
I'm partnered probably with like 20 to 30 different lenders, banks. I could do traditional non-QM. So that's going to be like conventional VA, FHA, and then also self-employed borrowers, the P&L, the bank statements. And then I also am involved. I work with a lot of investors. So I could do the fix and flip loans and the hard money and I think we were talking about that, the hard money and the private money, like all kind of the same.
Yeah, because I use a lot of private money, but it's definitely different than your private money.
Well, how would it be? I mean, it's just like a private investor, right?
Yeah, but not lending on an institutional style. So like my private monies are like people I know, like you, if you want to invest my deal, like
okay.
you want to put up 20K on a deal that I have, you're a private money lender.
Oh, okay, got it.
Money partner.
Okay, no, mine are like private investors. Yeah, more traditional.
Okay. So private as in nobody knows who they are?
Well, we name them like just like Mr. It almost reminds me, I just kind of name them like, what was that movie? Like Reservoir Dogs, where they're just like Mr. Pink and Mr. Blue. Yeah.
Yeah. So, usually like, for instance, I have 2 private money lenders on this deal that I'm closing on Friday, but the lender doesn't know that because they're private. They're not private to me because they're my connections, right? But they're private to anybody else that's affiliated with the deal unless I want them to know who's lending on it, which I usually don't.
Yeah. So if I was getting your money from our like private investor and you were using other money that you raised from like your people, depending on the situation, they wouldn't know that either. We would just put it all in your account.
Right.
It would all just show you. So it would be the same thing.
So it'd be private money funding private money.
What is it?
So it'd be private money funding the down payment for the private money.
Yeah.
Yeah, that works. Yeah. Yeah. For us, we do private money partners, right? So private money partners usually come in and they're not really getting any interest on their money. They are getting equity in the property and they're getting part of cash flow, right? Whatever it is. Or if it's a fix and flip, they're partnering. They're bringing in the cash. We're bringing the property. We're doing the fix and flip. We're handing the sale. They're just bringing the cash. And whenever we sell, they get a percentage of whatever that is, right?
Got it.
Percentage of the profits. And then a private money lender is going to come in and usually they're short. They're like 6, 12, 18 months, sometimes 2 years, depending on who you're dealing with. But like I have one friend of mine, he lends on quite a few of my deals, but he likes to park his money. He'll just park it for 2-3 years. And I just pay him interest only payments every month on the deal. Nice. But it works because it generates income for me. And then he loves it because he's just making endless cash flow and his money's safe with the property. Yeah. So he's super.
I love that.
Yeah.
Well, and they said it's better, like, especially if you're going to be in the investor world and to have, that would be like, it's better to have a friend like you and doing that through you that's like making their money work rather than sitting in the bank and then not getting anything back. Because you're still like you're still paying him interest, right? Or so it's still adding exactly. So I feel like that's a great avenue too. Yeah. Like if you have a friend like you, that's just like, all right, give me some more because you're always gonna have a deal,
I mean, we have some lenders that they park their money. They make 8% a year. Some are 10, some are 12, but they don't have to worry. It's just a constant check every month that gets deposited in their bank account. And I have a couple of them. They've already extended like they had a loan I had a loan with them for 2 years, and they're like, "Hey, you think I could just leave it in there?" Like, yeah, just leave it and let it ride.
Yeah. I love that.
But so it's definitely, it's good in that aspect to have a lot of those. And that's what I was talking about with a lot of people in sub 2, or at least people that are trying to take down sub 2. So sub 2 and is a blanket term for anything kind of creative. So like seller finance, or if we're going to take over somebody's mortgage, subject to.
Yep.
But a lot of times the seller wants a down payment, and the investor, being there's two types of investors. There's like the investor that wants to buy it all and don't borrow any money, and then there's the guys that borrow at every dollar, right?
Yeah.
So the guys coming in that are buying these sub 2s, a lot of times they're borrowing other people's money, private money lenders or private money partners, to come in and put down the down payment, and then they work it out and whatever their terms are. But we have a lot of folks that are looking for funds like that, like tons.
Yeah.
Like if you ever
now.
if you ever come across a private lender that would lend on second position loans, second position, and these are smaller amounts. These are like anywhere from, I would say, 50, maybe even 30 on the low end to.
See, those are harder for me to get. Yeah. And that's what I've been meeting more people as I'm like networking and stuff, because there are some don't have the big bags, and then some don't. Like mine don't really take the smaller, like the smaller hard money loans, like maybe out here in California, but it gets tricky. Like I have I've been talking to a lot of clients, maybe like some are Missouri or, these other states, and they're doing like they're looking for like fix and flip loans, but it's like under 50,000 and then plus like the rehab. But most of my minimums are like 75. So
yeah, most of my hard money 100, but we do like in Vegas, like typical house in Vegas, I think your minimum medium high price point in Vegas is like 470.
Yeah.
So, yeah, but like the one I'm doing right now, it's 630, but ARV is like 950. So it's a good little lick. But
450, that seems higher. When I lived there, I feel like it was definitely at like 2 or like 150 to 2. But that was probably, I lived out there 2012 to 20.
Oh yeah, you were like right after the crash.
Oh yeah.
Yeah. So
I didn't know, like at the time I was so young.
So during the pandemic, right, from 2020 to 2022, prices like almost doubled in Vegas. They rose 40%.
Yeah, most of them did throughout the states.
Yeah, and especially like your major cities, metropolitan areas. But I think in 2024, at the beginning of 24, your median price point in Vegas was like 410. Now it's at like 470.
Almost 5.
Yeah.
It's so hot. Yeah. I could handle the heat over there. I couldn't handle how cold it got. I never thought about it until I was actually there, like for the first winter. I'm like, man, I never thought it was like 16 degrees. Yeah. And I'm from like Southern California.
Yeah. That's wild.
So that
it's hot for like 4 to 5 months, and then I like the weather.
And then it's freezing. Like to me, I was the biggest. I was the biggest baby.
Yeah.
But I like live in 70-degree weather. Like I live at the beach right here too. Like I haven't even needed to. I wear a jacket, like a very light jacket when I run in the mornings, and it's still like not cold enough yet.
Yeah, I used to live in
December. It's like mid-December. It's pretty wild.
Yeah, SoCal's nice. It's like the best weather on the planet. That's why it's so expensive there.
Yeah.
Like, what's your median house price right there?
Over $1 million. Like where I live, I live less than a mile from the beach though. So I think in my area, it's not, they're like attached. What are those? They're single families, but attached, but it's like in an HOA, but they're not like condos. These are about 900,000 over here. And we are pretty close to the beach. Yeah. But if you get a little closer, everything's looking, even in this area, they haven't been a lot of them are so old,
Hmm.
like 30, 40, 50, or, like nothing's been remodeled.
Oh, wow.
So I feel like, yeah, over here, probably about 900 to 1.2. Uh,
Nice.
and then they just start going up.
Wow. Yeah,
Like,
that's San Diego,
it's
right?
pretty wild. I've done some open houses, like this one place down there, I just like could not believe it was like 2 or 3 million, and it was small. Like
Oh,
there was like no backyard, barely. I mean, everything was about, it just like hadn't been remodeled. It was just almost like a studio type.
hmm.
That was pretty wild. I'm like, man. And then I work with people in Texas.
Hmm.
A lot of my clients send me. I did have these that were some of my clients that were shopping in very nice areas. So they were looking at like 900,000, $1 million homes, which is still very high, like they're very, very like good areas in Texas. But they would send me these things that they were like, I sent them a photo of another house that I was working on for like the same price, but
Yeah.
it's pretty wild. Like they have like the driveways that are coming out. It looks like a mansion.
Yeah.
And
This,
then
yeah,
it's like a
big, big
shoebox.
difference. You get a lot more for your money. I guess it doesn't really differ from California much, but Texas is the property taxes are crazy.
Yeah.
2 to 3%.
I always tell everybody, it's like, look, it's almost like you got to pick your battle. So you go to Texas, you're going to have high property taxes. You get the lower housing, like up north, you're going to have higher insurance.
Yeah.
You move into a condo, so you don't have to worry about fixing anything, or, worry about your lawn, or, all these things, which
Yeah.
for me, if I'm single, like that's important to me. But you're going to be paying for it, like then you're going to have like 800 HOA, or like, 5 to 800. So I just kind of tell people like, pick your battle. Like what's important to you? Do you want
Yeah.
the lower house? And then each area is going to come with its own thing.
Yeah.
So what is right for you? What's right for your family? Like if you're single and you don't want to fix things, like to me, like, I'll pay for an HOA. Like I'd
Yeah.
rather not have to worry about everything.
That's true. True.
So it's just, I just kind of tell them to think about that. But yeah, it's like we look at a state, but at the same time, what they always say, they're like, wow, I could go get a house in like Indiana for like 200,000. But then it's like, you're living in Indiana,
Yeah.
and if that's not your,
I
if
would
you
do Texas because I could
don't
buy
want to do
I could
this.
buy a sweet property in like Northwest Houston, which not Houston, like Cypress, Katy, or Spring.
Yeah.
If I'm paying like 600, like I can get a half acre pool, like
Yeah.
super pad, like 3,000 square foot, like pretty sick pad.
That's
Um,
where I want to be. I plan this year to at least get started over there.
yeah.
But in Austin, I want my first Airbnb over there.
So Austin
We'll
is
see.
tricky, but yeah, you can
I
do
don't
it.
know. I'm just gonna dive in.
Do it. Do
Gotta
it.
take risks.
Yeah.
Okay. I've met a lot of people. I'm gonna figure it out. But I also I do like the other areas, but I've been licensed out there for years. So I
Oh,
do I plan to kind of live in both. Little
yeah.
Texas, little California, just kind of
That
float
works.
for a bit.
That's
Yeah.
good. Ain't nothing wrong with that. Well, Tiffany, tell everybody where they could find you if they want to look you up.
Yes. So everything is under Tiff Does Loans. I also do have a podcast on YouTube where we talk to realtors and investors. And yeah, if you want residential, commercial loans, I am your girl.
Great. And I did put her Linktree link in the description below so you could find her and everything that she has going on. Look her up. Tiffany, it was a pleasure seeing you as always. And thank you for your insider knowledge. Now I'm going to go get some loans from you.
Yep. Thank you.
All right. We'll talk to you again.